When you're an employer, you pay national insurance contributions for your employees. This is a mandatory payment that helps support the welfare system in the UK. It's not just a legal obligation, but also a way to ensure your employees are covered for various benefits. There are different rules for different types of payments. For instance, the contributions you make can vary depending on the nature of the employee's earnings. We're going to look at something called P11D forms. These forms are essential for reporting benefits and expenses provided to employees. These are for benefits you give your employees, like company cars or health insurance. Such benefits need to be reported accurately to avoid any compliance issues. Now here's where it gets a bit tricky. Understanding the specifics of what needs to be reported and how can be quite complex. You might think you can deduct all your NI contributions from your tax bill, just like you can with your business expenses. However, the rules are not that straightforward, and that's not always the case. The deductibility of these contributions depends on several factors, including the type of NI and the nature of the benefits provided. It depends on what the NI is for. For example, Class 1A contributions on benefits in kind are treated differently from Class 1 contributions on salaries. This can be confusing, so let's break it down. We'll go through the different types of contributions and how they impact your tax calculations. Here's the good news. When you pay national insurance contributions on your employees' wages, you can usually deduct this from your company's profits before you pay corporation tax. This is a big help for businesses. You're paying for your employees to be part of the system, so the government gives you tax relief on national insurance contributions paid on your employees' wages. But remember, this only applies to regular NI contributions, the ones you pay on salaries. Benefits are different. This is where it gets a bit complicated. Understanding the intricacies of tax regulations can be quite challenging, especially when it comes to employee benefits and national insurance contributions. When you give your employees certain benefits, you have to report them on a P11D form. This form is essential for detailing the benefits and expenses provided to employees, ensuring transparency and compliance with tax laws. You also have to pay national insurance on these benefits. This means additional costs for the employer, which can sometimes be a significant financial burden. But here's the catch. You can't deduct these NI contributions from your tax bill. This rule can be quite surprising and frustrating for many employers who are trying to manage their finances efficiently. They may feel like they are paying twice. Once for the benefits themselves, and again for the national insurance contributions, which can seem like an unfair double charge. The reason for this is that these benefits aren't considered essential earnings. They're seen as perks. These perks, while valuable to employees, are treated differently in the eyes of HMRC, and therefore they don't give you tax relief on NI relating to benefits. This distinction is crucial for employers to understand to avoid any unexpected tax liabilities. It's important to remember this difference. Don't get caught out. Always plan ahead and consult with a tax advisor to ensure you're fully aware of your obligations and can manage your finances effectively. As an employer, you have to stay on top of your admin. This means regularly updating and organizing all necessary documents to ensure everything is in order. Make sure you're reporting all your benefits correctly on the P11D forms. These forms are crucial for detailing any benefits and expenses provided to employees. And remember to budget for those non-deductible NI contributions. Proper budgeting helps in avoiding any unexpected financial burdens. This can trip people up if they are not careful. Mistakes in documents can lead to significant issues, so double-check everything. If you're ever unsure about anything, don't hesitate to ask for help. Seeking guidance from accountants and tax advisors can save you from potential errors and ensure compliance. They can guide you through the rules and make sure you're paying the right amount of tax. Their expertise can prevent costly mistakes and optimize your financial planning. You can also check the HMRC website. It's a valuable resource for up-to-date information and guidelines. They have lots of helpful information. From forms to detailed guides, the HMRC website can be an essential tool in managing your responsibilities effectively.